Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and before I get into the charts, I just want you to know to pay very close attention to the end of the video where it will lead you to my 7-point trading checklist. It's what I use to analyze the charts. You'll notice that when I look at each one of the charts and analyze the candlestick patterns, I go through the trading checklist to more or less weigh the evidence as to who's controlling the price of the stock. Is it the buyers controlling this week or the sellers? Well, this week, if we look at the diamonds, you'll see that we had a big nothing burger, more or less, of just sideways activity up here with a slight drift lower. But if you look down below, you'll see that the oscillators are starting to pick up some momentum on the downside. So like I said, let's take out that trading checklist. What do we have? Well, we have a lower high today and a slightly lower low. So if we're analyzing the buy versus the sell signal, that candle is not a strong candle. It's more of a doji sign of indecision. But the fact that we still have a downward trend with lower highs and lower lows, that's considered to be a sell signal. We still have a fairly wide divergence from that moving average, so that would be more bearish than bullish. We have a slight increase in volume on the red after a drop yesterday. Again, this volume is just kind of laying flat for the most part, so I'm going to say that's more neutral. But going down to the oscillators, again, you got the stochastic heading lower. The CCI is still heading lower, so I'm not moving my downside targets there. In fact, what I'm going to do is I'm going to draw a horizontal line so that we can keep that in place instead of drawing that out. I know some of our viewers say, oh, you're just moving it out. Well, yeah, that's exactly what I'm doing. I'm moving the target out so we don't have to keep moving the diagonal line. It's just easier to keep that downside target at 330.56 in a horizontal line. So that's DIA. If we look at IWM, you're going to see pretty much the same thing. We've got this lower high, lower low. The 20-period moving average was breached today, but it didn't close below the 20-period moving average. Volume is increasing on that red candle. Oscillators are going down. And the CCI is very, very close to crossing below that zero line. So remember, if you're following along with my charts, you'll know that 80% of the time or more, we generally get a drift lower in the direction of that cross for about 2 to 4 days. So if we get that cross below the zero line, expect to go lower. So I'm going to just, again, keep that target in place right there. IWM is 171.82. Now, if we look at the Qs, this more or less represents the tech sector. You can see that we are, again, flirting with that 20-period moving average. The volume is still pretty much the same as what it was yesterday, but no big changes because we're not really at a pivot point here. We're right at that moving average. So that's going to be neutral. The candle's going to be neutral because it's more of a spinning top. However, the oscillators are still drifting lower. Again, downside target for the Qs is 309.77. I drew that during a webinar. I drew that horizontal line, that is, during a webinar, so we didn't have to keep moving that diagonal line, also known as the speed line. We didn't have to keep moving that out. So that is QQQ. If we look at SPY, this is the S&P 500 ETF. We still have a lower high today, slightly lower low. The volume, again, drifting sideways, not much of anything happening there. Oscillators, same story, still moving lower. CCI very close to a cross down below that zero line. So the S&P or SPY target is 401.73. That has not changed. But I do want to talk a little bit more about the VIX because we have a conflict down here. Yesterday, we had a bullish harami. Today, we had a bearish engulfing. Those are going to cancel out, so that's more of a neutral signal. And if you look at the VIX, we have the oscillators still moving up. The CCI crossed with a buy signal yesterday, but the big story on the VIX is not so much in the price action. I want to show you the June open interest. We are just a hair away from crossing over 500,000 open interest in the June 30 calls. And we have 429, almost 430,000 open interest in the 40s. Now, that might be a spread. I don't think it's a short spread. I think that is more of a bullish spread there. And so keep an eye on that, because I've never seen open interest like that in the VIX. So if that is someone that's speculating, maybe because they know something we don't, then something will most likely happen in May or just before expiration in June. And that might be a hedge, or it might be some speculation based on information that's coming out. So I like to connect the dots. I tell people, don't let the news hit you. You go out there and search for the news, and you're going to do a lot better if you hunt for the news. And I'm going to go right into that right now as we go into the geopolitical news. So starting off with the attack on the dollar, it continues. Absolutely. This came out a few days ago on Bloomberg. The de-dollarization is happening. Now, remember what I said? I think it was last month or maybe 3 weeks ago. I said I pay very close attention to the emotional words that are being thrown into an article or a news piece. And so they're talking about this being a stunning pace. So pay very close attention to that. And the dollar is losing its reserve status, but that's the plan. The BRICS nations are coming together. They've had enough of the dollar and us putting them in sanctions here for not listening to them there. It's just in the process. It's just a matter of time before the dollar collapses, and that's why I continue to accumulate gold and silver. Can't tell you to do that, but that's something that I'm doing, and I know a lot of other people are doing the same thing. Now, if I go here to this article, please keep in mind that I get this from Zero Hedge, which, by the way, is a more right-leaning publication. And that doesn't mean that if you're left-leaning, you can't look at it, because here's what I'm telling you to do. In each one of these articles, they have these links here, and the links bring you to different news sources. They're more or less recycling the news that's out there, but it's not the news that's in mainstream media where it should be. It's where it's leading you to a place where you can go right to the source. You keep clicking through, you keep connecting the dots, and you're going to find a lot more than what you might expect otherwise than just watching the television. But this is an interview from the former Home Depot CEO. Now, he's warning that we're going to see a lot of bankruptcies, and he's not talking about personal bankruptcies. He's talking about this more on a corporate level. Now, if you connect the dots again, if corporations start filing bankruptcy, and then we have unemployment going through the roof, and people start getting their cars repossessed and they can't make the mortgage payment, then, of course, you're going to see more personal bankruptcies go up as well. So keep an eye on that. The Fed president, this is the St. Louis Fed president, James Bullard, made some comments that are now being reiterated by some of the major investing companies. And he basically said that the market has this all priced wrong. The market is pricing as though the Fed is going to start cutting back on rates, not the pace of rate hikes, but cutting back on rates themselves. He says they've got that wrong. And he even forecasted that they're going to continue to raise through 2024 and possibly into 2025. So the markets are just kind of drifting sideways right now. But as earnings season heats up, as more and more companies start to disappoint, I think you're going to see more pressure on the downside. Now, with regard to economic condition, this is from the New York Fed. Look at what we have right here. We're in the danger zone already, but these gray areas represent past recessions, right? The width of that shadowed area more or less gives us the length of the recession and how long it lasted. We have not seen any gray here yet, but I think we will. And when they finally do recognize the fact that we're moving full speed ahead into a recession, and that could be a deep recession, then I think you're going to see the markets respond to that as well. Okay, now moving on to the next slide, we see right here that we have freight recession. What is that? Well, J.B. Hunt Transport Services came out with earnings, and they missed all expectations there, and that the amount of the truckloads that they haul has fallen, and they are fearing a freight recession. That's a dry up of products being moved via the trucking and rail. And so this is most likely, again, another indicator. It's a leading indicator that's pointing us to that recession that no one's talking about, right? So again, they don't want to use the R word. This came out from Bloomberg just 3 days ago. Meta prepares for more layoffs across Facebook, WhatsApp, Instagram. Not only are they just coming out of some of that, but they're expecting more layoffs and additional cuts in May as well. So again, just more evidence stacking up one after the next. And the U.S. leading economic indicators are tumbling, and this is for the 12th straight month in a row, signaling a recession is imminent. Folks, I believe we're already in a recession. You just haven't seen the data come out yet. You know, last week I showed the lines that I drew on the longer-term monthly chart and how they compared to the crash of 2008 and the crash of 2000. I believe history is going to repeat itself. I've said this over and over, not just for the record, but just to make sure I'm pounding the table on risk management and getting people prepared. I believe that the downturn in the market and the economic downturn is actually going to shock a lot of people. And I say that seriously. I'm not embellishing that. I believe it's going to be shocking. I said that last year. I continue to say it periodically because I want people to know. And I'm not trying to scare anybody. I'm just trying to prepare everyone. Because remember, if you're using option spreads in particular or bearish ETFs, you can make money on the way down. As long as you follow the charts, manage risk, stay connected with people that are getting the real news and not the fake news, you're going to do absolutely fine. Even if you're not putting a whole lot of money in the market, at least try to trade using paper trades. There's no risk paper trading until you learn how to read the charts, how to put your 7-point trading checklist together, how to manage risk. You practice through repetition, because what I've always said is that repetition is the best teacher. So again, stay tuned to the video just after this. You'll get your hands on the 7-point trading checklist. And until then, I'll talk to you next week. So long. There's no more damaging formula than to mix emotions with money. Listen, we're made up of emotions. We have fear, we have stress. The trading checklist helps take that all away. And now, wow, take a deep breath, relax, and enjoy the ride. You might be completely foreign to technical analysis. You may not even know what a bullish engulfing candle is or a shooting star. That does not matter. The great thing about what I'm showing you right now is I'm taking 40 years of experience here and I'm breaking it down to 7 points that you can follow through a trading checklist. Look at any stock, any ticker symbol using the 7-point checklist that I have and determine who is in control of that price action. I'm AJ Monte and this is my 7-point trading checklist.